Hi everyone, it's Marissa here from Rise High Financial Solutions, and today I'm joined by the lovely Emma, who is the CEO of Turner Real Estate. Lockie's had an injury, so Emma's stepping in.
Thanks for having me.
Absolutely. As always, we love to bring you our quarterly Adelaide Property Market update. This is definitely to help investors, to help home buyers, to help sellers, basically give you an insight into what's happened in the last 12 months. Last 12 months and the last 3 months, more specifically.
Yeah.
So we're here to bring you the June quarterly market update, aren't we, Emma?
Indeed, great.
It's amazing that we're already halfway through the year. You know, the new financial year is upon us, and lots of things are happening. You know, we've got interest rates that have been steady for a while, but there is murmur of interest rate rises. We've had rental reforms, haven't we? We'll talk a bit more about those later.
Lots to say on that.
But why don't you fill us in, Emma, with what's been happening with the property market over the last quarter?
Yeah, so we've definitely started to see a little bit more stock come on the market. Historically, we're still quite low with stock limits, and for anybody that's wanting to purchase, they're definitely feeling that. So that competition is still really strong, and as a result of that, we have seen some further increases in house prices. So the median house price in Adelaide is now $783,000, which is about 15% greater than it was only 12 months ago. And that's actually a little bit different to interstate. We've seen a little bit of cooling in the eastern states, but Adelaide in particular is still seeing those rises. And
still
the
going
stock
so strong. Like
the stock levels are still really tight, and we've still got buyers. So that's supply and demand is still very much playing out in the market.
We're definitely also seeing that it's just such a hard market to buy in right now. Selling seems to be quite easy.
Yeah, definitely.
Buying seems to be really hard. Although I am starting to see, you know, in some pockets, some people, you know, some houses are actually starting to take a bit longer to sell.
Yep.
You know, auction clearance rates are starting to come down a little bit. What are you sort of seeing as the trend, and what do you think the solution is for, I guess, getting the supply and demand back in check again?
Yeah, I think people are still nervous about interest rates. So for a lot of people, they just want to feel secure before they go to their next home.
Yes.
So probably where we're really seeing things slow is people moving from perhaps their first home that they purchased. Now they might have a couple more kids than when they started, or they want a fourth bedroom, a work from home, pool, backyard, all those types of things, but interest rates are stressing them. So they're saying, look, we are going to be 100% sure before we make that move, and we want that certainty in the economy and our budget before we make that move. So that's where we're seeing the market very, very flat, because only people that really have the means or really need to move are moving in that bracket. So that contracts the stock. Meanwhile, we've got lots of buyers that are keen to either start in the market or are ready to buy their second home, upgrade their home, and that demand is still really high. So we're still seeing that competition when properties are on the market. That said, of course, interest rates and the cost of living is affecting everybody. So we're starting to see a little bit more regulation in what people are offering and similar prices. I think sort of 12 to 18 months ago, as real estate agents would often be really shocked in how much more people were continually willing to offer, where that quantum of sort of the upper limit is starting to come back a bit, which I think is to be expected, and I think that's why we'll see a soft landing.
So you're expecting the growth to slow down?
Definitely. I just don't think
over
it's
the coming.
sustainable at
it
that
doesn't
level.
seem sustainable, but it has gone on way longer than what most people predicted.
Definitely.
And that's definitely a result of, you know, low supply and high demand. But like you said, just coming back to a point you said earlier, you know, the eastern states
They've really levelled off.
Leveled off. Adelaide's still going really, really strong. It doesn't, even though it does show signs of slowing in terms of the growth, it does still seem like it's going to continue for a while from where we're looking at in terms of the number of pre-approvals and the number of stock. You know, what are your thoughts, and what's Turner seeing in regards to that?
Yeah, I mean, you're kind of a step before us. And
Yes.
we were talking about this just the other day, is people will generally get their finances in mind, get a ballpark before they go hunting for property, which of course is a really wise move. So we've still got these people really wanting to do something. And I think the timing of when they do something will determine how the market falls out. I mean, consistently, we've just seen continued demand. So even with that levelling off a bit, we would definitely still expect house prices to stay level. What we may find, because we've had a bit longer period of growth than expected, is that we find more of a static period.
Yep.
But as you and I both know, being long-term property investors ourselves, is the Adelaide market just doesn't generally drop.
Yes.
It can hold for a long time before it might go up, but it doesn't drop, and I think that stability appeals to people.
I love that about the Adelaide market.
Yes, nice and certain.
It's
less
very
stressful.
Nice and steady, and we've had a really great run over the last few years, but yeah, we haven't really ever had it doesn't really come down like the eastern states experience. Let's move our attention to the rental market because there's some really interesting things happening over there. As well as seeing price growth over the last 12 to 24 months in values, we've seen massive growth in rental returns and rentals as well. So I know that Turner manage a really large portfolio of properties. Tell us what you're seeing in terms of the rental growth, because according to the stats, the figures have gone up again in the last quarter.
Yeah, they have. But this is something that I've seen a lot more in rentals than we've seen in sales. If a property is overpriced on the rental market, there's absolute crickets.
Okay.
People are very, very price sensitive. They simply can't afford that extra amount. So any property that's going to the market really needs to be priced ready to meet the market. Yes, there is a housing crisis, but there is also a cost of living crisis too.
Yes.
So getting the balance right. I mean, of course, we want the properties to be tenanted with great tenants, so we're having those conversations with owners, and they have seen that price growth. But again, I think we'll definitely see that level off in the next 12 months, and they've probably hit a peak for a while now. I don't think they'll drop substantially, but again, we just might not see that growth for as much for some time as well, which is probably fair.
Yeah, that's right. And I think, well, that is what the statistics show, that even though we have still experienced the, month-on-month growth in terms of that rental growth, and I think, over the June quarter, it did the growth slowed, and we're still getting that growth, but it is starting to slow.
Yeah, and different markets are a little bit different as well. The upper end is really struggling in in the higher amounts. A lot of people that have that disposable income are doing other things, such as purchasing their own home. So we've seen that cool off a little bit. It's a really niche market.
And possibly because of the cost of living pressures, tenants that were in more expensive properties are maybe now having to move to different suburbs where the rental is, consistent, so that they're not experiencing those rental rises. So people have had to adjust their expectations potentially, which is probably helping the bottom end of the market in terms of the cheaper rentals, would you say?
Definitely, there's still very, very strong demand at anything that's, I say under 500, I'm talking really generally, it's going to depend where you are, but even
under $500 a week?
Yeah, even in suburbs 30k's from the city, we're still seeing that's 450 to 500. Holding fairly solidly, which if people suggested to us 5 years ago, that's what the rent per week would be in some of those suburbs, people would have thought you were mad. But that's the reality, and certainly the cost of living has hit everybody equally through that market.
Yeah. So obviously there's been some interesting changes recently with rental reforms.
Yes, we've been through a lot of change.
Talk us through these rental reforms and how they're going to impact tenants and landlords.
Yeah, so the most substantial reforms for nearly 20 years, so it is quite different. I'm just going to touch on a couple of things that I think that are really important that landlords know and future investors know. A couple of things that really a good property manager should be just taking care of: boring forms, administration, that type of thing. But the headline items would be that a pet can't reasonably be refused, and I've chosen my words carefully there.
Reasonably be refused.
Correct, yeah. So it doesn't mean that you have to allow pets, but you have to consider them. And if you refuse them, there has to be fair grounds. So an example of that might be if somebody wanted to get a blue heeler puppy and they lived in a one-bedroom apartment with 39 other adjoining units. The questions would have to be how that's going to impact on the other unit holders, whether the dog had enough room for exercise, that type of thing.
Yeah.
But perhaps if the same tenant was applying with a cat that was house trained and all of that, perhaps there would be due cause for that. So that's caused some concern for some landlords. I suppose as people that have managed property for many years, we've seen a lot of trends towards having pets more and more. COVID definitely accelerated that.
A lot more people got pets over COVID.
Yeah,
didn't they?
yeah. And I suppose we see the good and the bad of that. We see a lot of the time people that have pets are really good long-term tenants. They really value the property, and it just has that extra incentive to keep the property well.
Yeah.
Conversely, we've seen pet damage, but we've seen lots of human damage too. So,
Yeah. And there is obviously the pet bond.
no, there's no pet bond.
Oh, there's no pet bond, so
no.
that's gone as well.
There was never a pet bond.
There was never a pet bond.
No.
Right.
Industry campaigned very heavily for that, but it was an absolute no, and that's consistent right across Australia. So it's still whether a human or a pet.
So I guess
does
the risk
damage.
is that, you know, because I think a lot of the landlords that were against this change were worried about pet damage to
Correct.
the property.
Yeah.
Which is
And fair
reasonable. Yeah. So I guess if that does happen, what is there to protect the landlord? Obviously,
Yeah.
they've got their bond that the tenant would have paid initially.
Definitely. And whether a human causes damage or a pet causes damage, it's still firmly the tenant's responsibility, and there's absolutely no grey area on that. It is damage, and it does need to be rectified.
And
But
if the
what-
bond doesn't cover that damage, the landlord would have recourse through their insurance, hopefully.
Correct. So that's where landlord insurance is absolutely critical. Policies can vary wildly. So there's 2 policies that we recommend, and even in that, one limits the damage to 5,000. They've increased it from 2.5.
Pet
And-
damage?
Yeah, and the pet has to be on the lease. The other policy will...
The pet has to be on the lease?
Yes, yeah,
Interesting.
there has to be an agreement. The other policy allows for up to $75,000 of damage, and the pet doesn't have to be on the lease. So
Okay.
both are really good policies in many different areas.
Are you
but
happy to share which policies you recommend?
Yes, yeah, we recommend Terry Shear and we recommend EBM.
Yep.
Yeah, so if pet damage is something that is really of concern to a landlord, we would encourage them to have a look at that EBM policy and see if that suited them. But of course, you've got to look at every element. The other thing that, regardless of whether we always want them to be on a pet agreement. So whether they start at the start of the tenancy, we've always had a pet agreement. It details the approved pet. Another thing to note is just because you've approved Sally the cat, the 8-year-old cat, if you no longer have Sally, which of course is a sad event for a tenant, it doesn't mean they can just go and get another cat. They
So
have
only
to
Sally the cat
apply.
was approved?
Correct,
Yeah.
correct. Because perhaps the landlord has agreed to have a house-trained Jack Russell that's been very close to the family, but their tolerance to have like a Rottweiler puppy, even though I've had a Rottie myself in the past, but may be different. So each pet has to be, and you can't just replace it with another same breed or anything. So we would note the name, the registration, and have that incorporated in the lease.
And what happens if a tenant has a pet in the property that hasn't been approved?
That is a breach of the lease. There's no black and white about, there's no grey area, it's very black and white. You still require that approval and relevant documentation.
Yeah, okay. So obviously the pet reforms was a big part of the reforms.
Well, the government felt it was. But yeah.
What was some of the other, I think you said that there was another big aspect to the reforms as well?
Yeah. A couple of things that we really still don't agree with and are really working through and working closely with our clients is that they're calling it no-cause evictions, which I disagree with. But if a person's been in the property, unless there are serious breaches within the tenancy, you can't require them to leave at the end of their fixed-term lease,
Right.
even if you sell the property.
Okay.
So there's certain reasons that you can give rise to
interesting.
ending a tenancy at the end of the fixed term. It may be that you or an immediate family member wants to occupy it. You're doing major renovations that would disrupt the tenancy. The tenant has breached their agreement by perhaps having a pet when it wasn't approved, or perhaps not paying rent or water arrears or cleanliness or whatever. It has to be one of those prescribed conditions.
Okay.
So that is a fairly big infringement on private investment. But here we are, and unfortunately that seems to be a national agenda.
So let's just discuss that from the sense that, okay, you've got a tenant in there, and at the end of the tenancy you want to increase the rent to meet market conditions, and maybe that's quite a large increase. I mean, it has been quite a large increase when tenancies have been expiring over the last 12 months.
Yep.
So what happens if the current tenant doesn't want to pay that increase?
If they didn't want to pay the rent, they would have to leave still.
Okay.
So they're two separate issues. So we would issue a rent increase. We can only do that once every 12 months.
Yes.
So we might offer a renewal at a higher price. The tenant might not want to commit for 12 months, but if they stay past that date of the effective rent increase, they do have to still pay that rent increase.
Okay.
But you may be in a periodic tenancy now.
So basically, the tenant either has to choose to leave, or it has to be one of those prescribed
reasons. So investors need to be chatting to their property manager to kind of, like, if they're thinking about selling, or they're thinking about moving in, or putting their child or grandchild in there. Quite often we see that with kids moving down to attend uni from the country or something like that. It's really helpful for us to know those things at least 12 months in advance. And we can then be the negotiator and have those conversations with a tenant. And if they're a great tenant, look, usually we can help them get another tenancy too.
I think, the changes seem to be heavily in favour of tenants over landlord.
100%.
And this has been a common trend across Australia.
It is.
You know, in every other state, we have seen reforms recently in terms of tenant rights and the way that, landlord responsibilities and the choices that landlords can make. What I would say, though, is when I compare the changes that have been made in South Australia, whilst I may not agree with all of them, they don't seem to be as restrictive on landlords as some of the other states.
Correct.
So I still think South Australia actually is one of the better states to invest in and to be a landlord in. When I compare the rules that we have here versus the rules that they have in Victoria and Canberra and different states like that.
That's right. And I mean, if we take a long-term view, of course, of investors, the capital increases are still going to be there. There's still strong demand for housing. I would like to think that it enhances the value that a quality property manager can offer as a service, and certainly that's very much part of our charter here at Turner Real Estate.
Very important.
I think that but it may put some people off entering the market. So from an investment perspective, perhaps that's more valuable to us. But does it solve the rental crisis? Absolutely not.
Absolutely not. And I think, like you said when we were going through the changes, is that there are ways to get around them. It's a bit tricky.
Well, we never say we're getting around them.
Not get around them, but there are...
We plan for what's going to happen in the future.
You can plan for what's going to happen in the future, and there is, some mitigating factors that can help you to manage your properties effectively.
That's right.
That's great to hear. I think the other really interesting thing that I wanted to mention today is construction. So obviously construction is a big thing that impacts supply.
Yes.
And what we've actually started to see, we have since COVID seen construction costs skyrocket, which has really become a problem for people that are looking to build. And it's also had an issue with the supply factor. We've actually seen, that increase in construction costs slow right down. And we had the slowest growth in construction costs in the last quarter that we've had since COVID. So it's really, really exciting to see that we're starting to see those construction costs stabilise, which is going to give people that want to build more certainty and stability. Mind you, construction and building costs are still 30% more expensive now than they were pre-COVID, but we're starting to see it stabilise. So I guess when we look at, construction costs stabilising, the rental reforms that we've spoken about, what's your thoughts in relation to what's going to happen to supply and demand moving forward, and how that will impact the market.
Yeah, I mean, if you look at longer term trends, immigration is still expected to be a net contributor to population growth here in South Australia.
And of course, they need houses to live in.
Correct.
Generally, initially, they need rental houses to live in.
Yeah, that's right. So we just don't have that amount of stock. I mean, the next, I think, 10 years is around 700,000 extra people. Which is a lot of people.
Yeah.
And we will generally find with migrants, they will seek properties closer to the city because they may not come with a car. They may be sharing with friends and family initially.
Access to public transport.
That's right. They're unlimited funds, so they're generally looking for small properties close to where they can live, work, and access infrastructure. So that's definitely a challenge. We're also, as a state, looking for new opportunities for first home buyers, and infrastructure is somewhat limited on metropolitan area, has been well documented in the media in recent times. So that's definitely a bit of a pressure that we need to solve as well. So I think it's a really slow burn of a lot of different factors, but for the next 10 years, the trajectory still is demand will be stronger than
and the
supply.
government does have a housing supply plan.
Yes.
But it doesn't even come close to meeting
and the private
demand
sector has to be involved in
from
that.
from the migration, from the changing demographics that we're seeing in society. So definitely we're still seeing higher demand and less supply.
That's right.
Even though we expect those things to improve and stabilise a little bit, it seems like pretty good news for property owners in Adelaide. Pretty hard news for property buyers in Adelaide.
Yeah, I think that's true. If you're already in the market,
it's great.
It's a lot easier.
Great if you're already in the market, especially for investors that have been able to capitalise on these, great rental returns, great value growth. But yeah, it's a little bit harder for those that are buying.
It is
to get in. But look, I think that's been great having you here today, Emma. It's been lovely doing this quarterly market update with you. Thank you for joining us.
No, my pleasure.
And if you have any questions about the property market, anything you want to know about your own portfolio, or maybe you're looking to buy, looking to sell, obviously the team at Rise High and the team at Turner would love to help you out with any of your questions. So please don't hesitate to reach out, and we'd love to be of service. Thanks for tuning in. We'll see you again next time. Bye.